welcome to this presentation on the different bets available to you in financial spread betting. The four areas we're going to look at today are the futures market, binary bets, daily bets and rolling daily bets. We start with the futures market, a market that you've all probably heard of already. It was invented a long time ago by people buying and selling commodity type products as a way of reducing risk. So they knew the price that they were going to receive or pay at some point in the future. Not long after it was initiated, traders entered the market. It was a way of exposing themselves to different assets without actually having to take delivery of that particular asset. And obviously where there's traders there is also speculation, and we've often seen bubbles in different markets. What determines the price of futures? A number of factors. Obviously the spot price is a determining factor. If the spot price is high, then it's likely that the future contract will be high as well. There's the cost of carry. Obviously someone's got to look after or do some work with that commodity or whatever the asset is at the moment. There's also the interest rates you need to consider. When you buy a futures contract, you do so on a margin, you pay deposit, so there's obviously interest rates you need to consider. Specifically on stock futures, if there's a dividend expected to be paid, then that's taken into account in the futures contract, and if there is a dividend to be paid, then it's likely that your contract will be a little cheaper to take that into account. And like all financial markets, there's also a spread involved, often a spread in the futures market itself, but also be careful to make sure that you understand what spread your broker is offering as well. If we move on to binary bets, this is a relatively new area in financial spread betting, but it is gaining popularity very quickly. You might have seen something similar in sports betting before. There are two outcomes. You're either right or you're wrong. It doesn't matter how right you are or how wrong you are, which we'll see in other bets a bit later. Because there are only two outcomes, you know how much you can win or lose before you initiate the bet. That makes the bet very transparent, and I think one of the reasons why it's gaining in popularity. It's also a very short-term trade, often only lasting a day. If we look at an example of how the binary bets work, imagine that the FTSE 100 is trading up and you are confident that it will be up at the end of the day as well. You don't know how far up it will be, but you think that it will be. In fact, it doesn't actually matter how far up it finishes. As long as it finishes up, you'll win the bet. So you think the FTSE 100 will finish up, so you get a quote from your broker. The quote is 60 to 55. This means that if you put a bet on of £1, you'll win £40. That's the 100 minus 60 times the pound. We always have to look at what happens if you lose. So if the FTSE doesn't finish up, then you'll lose your bet and you'll lose £60, which is the 0 minus the 60, which makes it negative, times the £1. The daily bet expires at the close of trading because it's a daily bet. This time it does matter how right you are or how wrong you are, because you place a stake per point change. If we look at an example, imagine Tesco had a spread of £4.38 to 34 and £4.39.45. You're interested in going long, so you place a bet of £5 per point. The good news is that the share has gone up, and it's gone up by 5 points. So the bet is closed and you have made 25, which is the 5 points that it's gone up times the £5 stake you put on. Looking at it in reverse, if Tesco had fallen by 5 points, then you would have lost £25. If we move on to the rolling daily bet, it's very similar to the daily bet, but just doesn't expire at the end of the day. The trade is re-entered the next day, and you'll continue in the trade until you initiate the exit or a stop loss that you've set up has been reached. Because it lasts overnight, you need to consider interest because you're only putting a margin down. If you're going long, then you will pay interest to your broker. If you're going short, then you'll actually receive interest, although in today's low interest rate world, that's not actually very much at all, and in fact is probably zero. The spreads, well, the advantage of the rolling daily bet is the spreads are often smaller than the futures. So if you are looking to go for a bet lasting more than a day, then I would consider using the rolling daily bet. You need to choose a bet that suits your trading system. So obviously if you are going for bets that last more than a day, then you need to make sure that your bet is suitable for that. And also your personality as well. We saw two types of bet, one where it does matter how wrong you are or how right you are, and another one where it doesn't. Now if you get frustrated easily that you've missed out on big gains, then perhaps you should look at the daily bet or the rolling daily bet. If you just want to just be right and it doesn't matter how right you are, then consider the binary bet.